hot markets are dangerous.
The yields don't make sense for investors anymore. They're like, oh, this is kind of crappy yields. Like,
When something goes into hot, it's about understanding why is it hot.
why do you want to buy property? What are you trying to achieve with your property?
This is the main downside with hot markets that I find. When it gets hot and people know when to buy in, no one knows when it's time to sell. I'm going to buy in Australia's hottest market. I'm going to buy in a place that's about to go boom or is already on a tear. That is often the dream of so many property investors, where they make a mozza straight away and be like, yeah, I'm doing really, really well with this property investment game. In this episode, we want to talk some hard truths. We want to go through whether these areas are indeed the best areas for you to invest in, or perhaps you should be looking at areas that have the exact opposite, where the media is saying, hey, this area kind of sucks. So we're going to deep dive into it. And I've got Adi, buyer's agent at Elia. Good friend. How are you, man? Nice to see you again.
Good to see you, Red. Are you sure I'm the buyer's agent? It says I'm the mortgage broker at Flint Invest here.
Oh, yeah. We mixed this up. I like it. I like this. I wanted to pretend I was here for a minute, so see what it's like.
You look cooler.
I appreciate it. And yeah, I'm on Team Blue.
That's
Team
right.
Blue. We got like rival New South Wales, Queensland vibes here.
Something going on there.
Yeah.
Very strange.
Team Blue today. But what do you think about this as a topic point? What's it like in your world? Like, when a client comes to you and they say, hey, I want to go and invest, what's more common? Like, what do they come to you with? Do you get that often? Being like, I want to hit a home run, Adi, let's go, make me $100,000 quickly. Is that common? Tell me, what's it like? You're a buyer's agent as well. So that's really interesting, because I feel like there's short-termism in buyer's agency to prove results a little bit. And like, a lot of people aren't around for 10 years. It's just like, I got to prove my performance inside the first 12 months. Yeah, there's a rise of short-termism that can drive even more activity into hot markets than what would be otherwise. So what do you think of that?
God, I've never really thought about it like that. That's such a good point. I mean, there's this whole, we made a little quip last time about data-driven buyer's agents, right?
Yep.
And there is this almost need to prove ourselves with like, oh, I want to be on Instagram saying I bought this property and it went up by 20% for my clients, so look how good I am.
Do you feel like that?
I feel like that, yeah. I felt that pressure in the beginning, right? In the beginning of my buyer's agency journey, I felt that pressure. I was like, oh man, I need to buy the same stock in the same markets for a lot of people, so I can tell them, hey, your property's up 25%. Look how good I am. And sort of. But then it took me. What I was sort of neglecting was my 10 years of experience, right? I forgot about all of that.
Lean into that. That's what's made you successful, right?
Yeah, and I was just like, why am I doing this? This is not how I built my portfolio. That's what are we talking about? It doesn't apply to everyone.
That's so interesting.
So it didn't take long. Within a couple of months, I was like, I'm not doing this. I'm going back to my fundamentals. I know. So yeah, there's absolutely, there's definitely a market for short-termism, right? I'll give you an example of a client story. A client came to me, one of my earlier clients, and they were like, we have this very specific goal, Addy.
Yep.
We want to, we have a 6-year-old at home, right? Or sorry, a 3-year-old at home. We want to send them to a specific school in Melbourne. And to send them to that school, they need to be in this certain catchment zone. For us to be in that catchment zone, suddenly our median price for the house has just gone up by like $300,000. We need a lot more money than we have today in 4 years' time to be able to buy a house in this suburb.
That's hard.
That's hard, right? And I was like, man, I don't love this idea of using property as this, short-term thing to get to your goal. But that was their only goal. There was no passive income discussions. There was no portfolio discussions. It was, Addy, can you help us get to this goal? And I was like, you know what? A short-term market is perfect for you guys, because all you need is a very aggressive 2-year cycle, which will carry you, add another 100, 150K to your deposit.
This North Queensland?
It was North Queensland.
North Queensland, the winner of Australia's hottest market.
Absolutely.
We've gone through this a few times, right?
We have, right? And
I've
I've been there. I was there. Like, I'm in North Queensland myself. I've got a couple of properties there. And it sort of dawned on me. I was like, okay, it does play a role, right? It has to. And this is where the whole strategy piece comes in. What discussion are you having with your client that sort of tells you that, this market might be the right market for them, you know? So have I bought another North Queensland property for another client? No, I haven't, because no one's come to me with such a short-term goal before. Because most of the people that came to me, they have a long-term horizon, right? They're like, not really looking for volatility. They're not really looking to go through all these transition costs. You know, when you sort of sell property, you know,
it's risky.
It is risky, man. It is risky, right? So yes, there's definitely a play for it. But what I find disappointing about the industry now is that so many buyers agents almost flout their expertise through the percentage growth that they see in the first 6 months.
Yes.
That's not what makes you an expert.
Yes.
Anyone can do that, right? A client could go and buy a property in Townsville, right? Yes, maybe pay 20 grand overs for it, but who cares? In the long run, you're still going to be ahead, right? In the next 2 to 3 years. That does not make you an expert. Anyone can do that, and anyone is doing that.
Yes. So you just touched on something. With hot markets, it's very easy to identify them. It isn't particularly hard at all. If you want to know how to do this and you want to save yourself thousands of dollars paying other people for courses and buyer's agents courses, all that sort of stuff, jump on dsr.com.au. That's some website that checks out demand versus supply, and just put in a few frameworks and pick the highest DSR plus score, and you'll see the hottest markets. It'll give you the 30 hottest markets. I've done this, and it's just literally picked out the hottest markets where everyone's buying. So if you wanted to buy an area that's going to do really, really well, it's not hard. You don't need to spend a lot of money for expertise to pick out which market's hot. Like, you may need a lot of help for execution because it's hard to buy in these suburbs, but it's not particularly hard to find them because it's just got such a big demand uplift and no supply coming online in that short time period, and prices are running really, really hot at that time period. And there's a lot of people buying in these areas. That's what they're targeting. So not particularly hard. One of the characteristics of a hot market. Exactly.
It's real. And to be honest, you're probably going to read about them on the media anyway, you know, these sort of, that carries its own sort of, you know, there's almost like a pull to it. Oh, you've read it in the media. Townsville's doing crazy. So that must be the market to buy in. Most people want to buy when property prices are going up, right?
Yes.
No one wants to catch a falling knife and all that kind of stuff, right?
Yep.
But going back to the buyer's agency ethos, you know, most buyer's agents are buying these markets because it gets them that case study to be like, look how good I am. And for the normal, you know, everyday investor, they don't necessarily know about, all they know is their property has just gone up 20%. So that's why, you know, I worked very hard to sort of almost unlearn this pattern of behavior. And I was like, no.
It's clever.
You know, I'm not going to do that. Why am I doing this? I've done this for 10 years. I've built a pretty significant portfolio. I'm happy with where I am. It sort of gets me to the level of freedom that I was hoping for in my mid-30s. I'm going to use the same ethos, right? So a lot of my discussions are about, why do you want to buy property? What are you trying to achieve with your property? Is your property... It's a very different conversation now from the ones I was having early on.
Yes.
That then helps me dictate, okay, you have a long-term horizon. I had a wonderful business owner that reached out to me about a week ago. Long-term I want long-term generational wealth, Addy. That is a very different conversation to, I want 200 grand in 3 years. He doesn't care about that.
Yes.
Right?
Yes.
So if I had gone to him and be like, hey, how have I got the market for you? Townsville, you know, or Mackay, you know, and it just doesn't meet his investment strategy. It doesn't meet his.
They'll do really well.
They'll do great.
They'll do very, very well.
Absolutely.
Well, they are doing very, very well at the moment as well. So the data kind of suggests that every framework of us looking at it was like, these areas are going to do well. They are doing well at the moment. But this is the main downside with hot markets that I find is when it gets hot and people know when to buy in, no one knows when it's time to sell. And this is the scary part because of all the behavioral changes that have happened, is there could be a large amount of selling that happens later on as well, because there's a lot of investors kicking in who will be more flighty with their money and being like, I don't want to be in Townsville anymore. Why did I buy in Townsville? Someone's going to be saying that in the year 2028, 2029 when it's at a different market cycle and being like, what? Like, where is this? Like, there's going to be so many people that say that. You can go back to Hobart as another example of a smaller market that went gangbusters a number of years ago now, and a lot of investors jumped in. But if you jumped in late in that time cycle, 1 or 2 years later into the process, you're buying at plus 60% or something like that. And then it's a little bit like, oh, okay, at what point does fair value kick in and when do prices begin falling. And Hobart, no surprise, is materially below its peak value. Like it's fallen in value a little bit, offsetting some of those gains. And if you tried to sell during that time period, you may not have made much at all, especially when you add in all the fees, etc. So that's where hot markets are dangerous. It can be like, it is rising now. It's rising really fast now. It's great. There's so much marketing messaging kicking in here. Everywhere I look, it's like that person buying in here. It looks attractive, but it might not be. And I know one market that looks like this at the moment, Adi. What do you think I'm talking about?
What do you tell me, Red? What do you think about?
Okay, so I think Perth is an example where if you go on your Instagram searches and you look, be like, I made 30% in Perth. Look at this. Big rental growth. I'm killing it, right?
I made 30% in Perth. So
very nice, right? So you did really, really well. But that could attract buyer behavior this year, now, late in the cycle.
Correct.
But I think I can make a very credible argument that Perth's going to do well on a data metric for a little bit longer. But I can also make a very credible argument that Perth prices will be below its peak value in the year 2028. And that peak value could be this year.
Correct.
That, you could have 3 years of negative value. So if you're buying in late 2024, in half to 2024, or now, you could be in a point where it's just like, oh, whoops, like I've gone backwards, but everyone said it was the greatest thing. Be like, yeah, but they said it and they're buying in 2022. Like you got to be careful with your timing a little bit with these hot markets, because these hot markets could easily turn into like the really, really cold, icy stuff. The one that's just like, I don't want to be here. Yeah. It's like nasty.
I don't want to be in a dead market for the next 7, 8 years.
A falling market.
That sucks.
There's volatility now. Property isn't as safe as it once was. It wasn't like it's just stable, it stops rising. It could fall a little bit too. And Perth's experienced that one before and it's got that volatility component to it. So that could easily happen too. So that's where it's a little bit scary with these hot markets. You got to be mindful of that, where it's just like you go in being like, when do you go out? Like, and if you don't get that right, and if you don't go out, then what does it look like in this particular market? Is it down a lot? Do I really want to be holding into these areas for the long term? You got to ask yourself some of those questions. How am I going to get out to protect myself from this? How bad could it possibly be? And the new one is, are there a lot more sellers than usual that's going to appear because all the investors are thinking the same thing, the concerns that I have, and they're just mitigating their risk by getting out?
Correct. So, I'm one of them. To be honest, I don't know if I didn't even tell you this, but last week I was having a call with an agent to sell my Perth property because it makes more sense for me to actually. I've done much better than 30% in the last 2 years that I've 2.5 years that I've held the property. Man. Get out of the property, pay my transaction costs, and go and put it into Can I ask just really roughly what did you buy at? And very, very low. So I bought it at 220. I actually negotiated it down to 212 because there was some.
What is it?
Building.
Is it a unit? Or?
No, it's a house on a 700 square meter block.
In Perth?
Regional WA. So Collie. I think we spoke about Collie.
Great spot. Yep.
380. I think I got quoted the other day. In terms of what I could sell it for today. That's without a renovation. So if I put in 10, 15 grand worth of work, God knows what I could sell this at. But the rent on it at the moment is $430 a week, I think, or $420 a week. Wow, insane. It's insane, right? Like the numbers don't make any sense, right? Yep. Does it still make sense to buy a $400,000 asset at $430 rent? Is there a better market for you out there? Probably. Would I buy in Collie today, knowing what I know about Collie? No, I'm actually selling Collie now, right? And one of the
my advice, sell.
Hey?
My advice, sell.
Exactly.
We're having a live strategy session here.
Yeah, that's right.
Like, what should you do?
I agree.
I think we're going to touch on something actually. Is we regularly on this pod, I'll do it again with Kurt pretty soon, where we go through state by state and we change our minds about things as time changes. Yeah. And people have asked us before, where it's just like, when's time to sell in different areas? And the data's kind of dropping off like a cliff in Perth in terms of its growth rates, where it's just like still positive. There's still a lot of demand out there. I don't know if I was in those numbers, I'll be like, it's done its purpose for me. Correct. I'm a property investor. I might move my money around. Might be time to sell. And if you think it's time to sell, right, and you're a whiz, and I'm sitting here saying it's time to sell, and we're running a property podcast that thousands of people are listening to, right? that probably suggests that other people are doing the same thing, thinking about it. That's new. This is a new way of thinking. Before it was, I'm going to buy and hold on to that property and never sell.
Correct.
But now people are buying in areas that they feel uncomfortable buying in. Like you're talking about Collie. Like,
Yeah, that's right.
You ever been there?
Funnily enough, I was there 3 weeks ago, and it is
Really?
it's an interesting town, right?
Like it.
Never thought I would end up in Collie. I was in Perth, so we drove down,
Check out your property.
Check out the property. It was a nice property. It's a really nice house.
I like
But I was like, gosh, this is far from a lot of places. I mean, it's gorgeous here. Don't get me wrong.
Yep.
It's crazy that my property has almost doubled in value in 2 years. Like,
I
it's
like
crazy.
this place.
Yeah, I like this place. It's
This
nuts.
place has been a moneymaker for me.
That's right. And I think,
a lot of people too.
You know what? Yeah, exactly.
Yes,
a lot of
I've seen
people
a lot
have
of
them.
investor
Yeah,
contracts in Collie.
100%. There you go. But you know what I really find, something for the audience to sort of think about, right? How do you actually, if you want to go into hot market, what is one of those things that tells you, this is starting to look a little bit dicey now? For me, it's vacancy rates. You know why? Because there's obviously a lot of investor activity. At some point, the market pressure that happens from a rental perspective is going to start to slow down because too many investors have gone in. There's a lot more rental stock in the market. Yep. And when you start seeing, when the vacancy rates were sort of falling off a cliff at one stage and suddenly they're sort of going the other direction, you're like, oh, wow, there's a lot of rental stock coming into the market.
Yep.
That's when the yields don't make sense for investors anymore. They're like, oh, this is kind of crappy yields. I kind of bought this place for my 6% yield. Now it's pretty crappy.
4.5, yep.
Exactly. I'm going to start selling off some of the stock.
Yep.
That is a great sort of market indicator that maybe this is a little bit too late to get into this market. That's one of the ones I use. If I see a steep increase in vacancy rates in the last 6 months, I'm like, Armadale, for example, in Perth, right? I don't even know what it did. 40% in a year or something? It was just going crazy over 2022, 2023.
Yep.
But if you see what the vacancy rates are doing there now, that's not a market I would be
Market has changed.
Exactly.
Market has changed. You got to stay on top of this stuff to actually work out what's going on. And you did touch on a few frameworks to assess this. You can use SQM research here with asking rents as well as one of the lead indicators for rents by suburb and see what's happening there and track that change. And yes, you do start seeing this in the investor story. So we'll touch on it here a little bit where we've been talking about Darwin as a colder market. So let's pivot over to, instead of buying these hot ass markets that are just flying, maybe you want to be buying cool, warming sort of markets. And about 6 months ago or 4 or 5 months ago, we were talking about Darwin as one that picks the risky. No one will look at this sort of area, but it's starting to look like it'll be cold. Like it's one of those cold to warming sort of ones. I'm now just putting it in. By next month, it'll be just plain hot. Like that's the way to describe it. Like there's a lot more activity happening there. But this one, I think, is more investor driven because you're seeing this. This is what you're seeing. You're seeing a fall in yields a little bit. You're seeing rental amounts come down, like rental dollars come down, where it's just like, okay, I mean, it's starting from a 6% yield, 6.5% yield in many cases. So it's starting better than everywhere, but you're not seeing it as like a sustained market pressure thing. You're just seeing more investors go in there. And that's a little bit of a difference between other markets. Like Perth, you look at being like, no, there's just an underlying shortage of homes. Adelaide, underlying shortage of homes. Market pressure builds and goes up. With Darwin, you're not seeing the same underlying pressure of homes. So you're seeing a different reason for why growth will happen. This then touches back into when something goes into hot, it's about understanding why is it hot? What are the economic drivers of it causing it to be hot? What are the behavioral drivers? Economics is a study of behavior. That's how I view it. It's just a study of people's behavior at an aggregate level. That's probably why we're talking about buyers agents and data-driven people buying in Darwin, because it's behavior that I'm studying and looking at. And this looks different. The data doesn't lie. It's telling us that it looks a little bit different to other boom cycles. But at the same time, Darwin's pretty hot right now. And how do I know it's hot? It's gone from ranking dead last for a long period of time in its growth numbers. And this January, so we're recording in early Feb here, it just posted the second highest growth rate, faster than Brisbane, faster than Perth, faster than Sydney, faster than Melbourne, faster than everywhere from dead last 3 or 4 months ago. Awesome. Like that turnaround is rapid. And I've said it here on this podcast where it's going to be much, much, much greater than what it is at the moment because the data is just catching up now and it'll just keep accelerating. And soon it'll be number one. It'll overtake Adelaide. It's very close. You see some of these picking there. So it's just like working out what's going to turn hot is really, really key for property investors because a lot of that growth that you have is in a short-term window that you make. You make it in 2 or 3 years. You make a huge boost. But if you're buying 1.5 years into that huge boost, then, you'll probably have some uplift net, but you could have an extended period of, hey, I made 100 grand in year one, and then I made nothing for 9 years.
Yeah.
Like, it could be something like that. So ideally, you're making it before that shoot off takes place. So that's the understanding of market cycles that we're talking about.
Darwin's such an interesting story, man. I mean, so what's your take on it? Like, think of it from a buyer's agency perspective, right? What kind of an investor would be going into a market like Darwin? I completely agree with you, by the way. The data's looking crazy over there.
Is it?
Suburb level data? Yeah,
Wow.
Absolutely.
Cool.
You can see the demand sort of picking up in days on markets, starting to drop and things like that. You can start to see the pattern of that
Really?
behaviors that you're saying.
Wow.
It's starting to sort of shift.
Yeah.
And honestly, Darwin's come up more in conversation in the last 2 months. You probably have something to do with that. than I've ever talked about Darwin. Darwin was like, the outback, who goes to Darwin?
Yep.
Crocodiles, blah, blah, blah. All these, outdated sort of views. But no, the market is changing. So from an investor perspective, what kind of an investor do you see going into a market like Darwin? Would you...
Someone who wants to make money quickly, willing to take a bit more risk, not really focused on the long term so much.
Perfect.
Someone who wants yield as well. Like, you want yield. Like, this is why there's so much attraction to Darwin is there's nothing left.
Yep.
You got to go by Townsville or Mackay or regional areas, but there's no capital left. I know Darwin is, like, on a numbers perspective, it's more comparable to a regional than to a capital, but there's not that many markets left, and you can get 6.5-7% yields there in many cases. And if you need that, then Darwin ticks a lot of boxes. Beautiful. So you're willing to take on a little bit more risk. It might not be your first property as well, or you want to make a lot of money really quickly, and you're willing to take a bit on. If I was a 21-year-old, I knew very clearly that I was going to be a property investor, and I was going to go buy up and do what I need to do to build a portfolio up. I'd probably be looking at Darwin now. I'd be like, you know what? I'm happy to roll the dice. Let's take on some risk. But my risk tolerance, which is something that we've talked about on this show before, is my risk tolerance is out here. It's not normal to the average property investor. But if I'm average and I want to be safe, secure, stable, I wouldn't be looking at Darwin. I'd be like, cool, it's going to be the number one market. I don't care. That's got nothing to do with me or my goals. That's just noise. Who cares? It's about that conversation that you just talked about. What are you actually looking for?
Correct.
And most people and Darwin don't make sense.
Correct. I think that's probably the best way to put it. If I was to bring up Darwin, I can just picture some of the conversations I've had. I brought up Darwin as part of their investment strategy. Pretty sure a lot of people would have hung up on me. So
We're like, who's this guy?
What are you talking about?
Who's
Darwin?
this guy? Right?
You sounded smart on the podcast. What the heck?
It's funny. We have seen more. This is really, really awkward and unintended, like some of the influence that we are having. But we have seen more Darwin contracts in the last month than 10 years combined. There's been a lot of people buying in Darwin, and that's probably the investor activity and partly some of the things we've said unintentionally. Like, I'm not trying to pump up Darwin house prices. I know some people are accusing me of that. That is not my goal. Okay, I'm not trying to do that.
There.
Yeah, I don't. I got no exposure to any of this sort of stuff. So it's just purely me reading economic change, reading behavioral change, and also unpacking some of the data behind it. And Darwin in particular was housing finance data, a very niche one that I think tells a lot if you understand how to look at it. This is ABS lending data because it tells you, it doesn't lie when you look at where people are getting their loans and who's getting their loans and where they're getting it, and looking at that change. And he tells you early mover markets very, very closely. And no one talks about it because it's in the economic change sort of narrative that most people don't look at. They're looking at the data of the suburb. And now you're saying that the data of the suburb is pretty good. But if you look at the early stuff that drives that data change, it's there earlier. So you can pick it up earlier.
Yeah.
I think that is a really, really good wrap up here, Adi. I think we touched on some really, really cool points about buying in hot markets, what you should watch out for, and why you might want to look at cooler markets that are rising in value over time, and some of the fundamentals that really drive property portfolios.